What is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Thank you so much for being here. Tony CC, welcome in. Thank you as always for being here. Yeshwant, much love to you. Dad87, thank you always for your support and your kind comments. CJ, welcome in, man. Should go to at least 67 one more time. Yeah, I do think well, I'll talk about what I expect to happen here based off of what we're seeing on the indicators. C-Train, welcome in. TMB Willa, full port. Mr. Rek8 Chun, welcome in, guys. Max is 76.50. If BTC hits that, the whale to exchange ratio is currently 64%. They will dump at 76-ish and repurchase much lower. Yeah, 76, 78. We have that order block. That 8-hour order block's a pretty important order block, and it's starting around 77. I think it is 76.9, 76.8. But guys, so Bitcoin topped out yesterday. We did pretty much reject. If we go on to our 4-hour time frame, that box that I talked about of resistance, let's see, right here, is that key level where all those fibs, trend-based fib extensions and that 0.5 Fibonacci is. And if we are going to see that bigger corrective move within this range being a way for, now as far as time goes, it's getting very extended in time. And then we're going to see that big dump in a fifth wave to the downside. It needs to happen pretty much very soon. It's already getting a little bit more extended. And so if you guys did watch yesterday's video, in yesterday's video, I talked about how we could actually be now, with the way this is starting to look, we could be in that WXY correction instead of a 5-wave impulse, instead of this being 1, 2, 3, 4 extended fifth wave here, where we could be looking at a WXY correction where there is a small possibility that the Y wave is done and that we are going to really push up here. But to me, it looks like that Y wave, we have that zigzag move in a W, we have that zigzag move in an X, and then we kind of need that zigzag move in a Y to finish our high time frame corrective move. And remember, this high time frame corrective move is supposed to be correcting for the entire push up that we've seen for 2.5 years from 15K. So it makes sense that we could go up for a couple more weeks and then down for a month or two, and then finish this entire corrective move and see maybe something, new all-time highs possibly being tackled, or at least some sort of accumulation range forming over the next couple months. But I do want to talk about on the lower time frames. So first off, yesterday and over the weekend, we really started to break our, let me get this off the chart. We really started to break this range to the upside, and started closing daily candles above the value area high of the range, and really started even breaking the pitchfork band, which this pitchfork band was acting as resistance for a lot of this range. You can see at the beginning of the range, the bottom of the pitchfork band was acting as resistance. And then we kind of had two fake outs above the top of the pitchfork band, but the top of the pitchfork band was acting as resistance. And now we're breaking above, but more importantly, it's the anchored VWAP, right? Because the anchored VWAP is kind of your volume trend, and that is based off volume. It's not just a trend line based off the candle highs, but it's based off your volume. So it's a very important trend. And if you're going to continue the bear trend, you want to see those rejections from around the anchored VWAP. You know, you can poke above a little bit, but what we've seen the past couple of days here, and let me just hide this real quick. This is low time frame stuff that I was looking at. We are breaking above that anchored VWAP, specifically yesterday, and flipping it to support on low time frames. So yes, we expected new highs to be made after yesterday. We flipped it into support and saw that flat correction in there. I'll zoom in onto the 15 minutes so you guys can get a better look at that. But that is kind of what we saw right in here yesterday. We finally were able to break above the anchored VWAP, flip it into support. So that is important. Now that we're flipping that into support, it is a sign of strength for the Bitcoin price, at least to continue up locally. But we're starting to form a range now, and you can see this very clear range that is starting to form in this 15-minute window here above the anchored VWAP. So is this just going to be some sort of distribution range that occurs where we do see a big dump to the downside, or is this just going to be some sort of corrective move where we then continue up to, you know, 78K or higher? So what I've been looking at this morning, and I talked to you guys about in the Telegram this morning, we saw that initial aggressive drop to the downside. And then after that aggressive drop, we see that selling exhaustion come in that we like to see, you know, that chunky overlap. And then you start to develop some low time frame bull divs when you see that overlap forming in this descending channel. So I was expecting the descending channel maybe to chop a little bit lower to backtest that anchored VWAP again, but we got the breakout this morning and we broke out pretty aggressively, but we did front run the golden pocket, pulled from the highs to the lows that we created overnight. And so what I'm looking at overall here is, just to give you a gist of it, is a corrective move, right? Some sort of three-wave corrective move to make a higher low, and then we could see a tackling of 78K or maybe even higher than that. But within this move, you want to see your initial push down, followed by that little three-wave corrective move generally up towards that golden pocket 786 area, and then the drop again in a pretty aggressive move to the downside. So if we're looking at just low time frame scalping right now, we can concentrate first and foremost on this range, and then we can concentrate on those levels that we could see rejections. If we're going to make a lower high here, we would expect to reject from that general area of the golden pocket in the 786. So you can see I've got the golden pocket on here, and knowing that earlier today we did front run that golden pocket, we do now have a little nice scalp setup here with the SFP of this high from earlier today into this golden pocket. So this is something that I am going to be looking at potentially shorting. And the reason why is because you can see so far we do see a very clear three-wave move up to that golden pocket. And we have to be careful though, because we did bounce from our 786 Fibonacci. If we pull from high or low to high and we turn on that 786 Fibonacci earlier today, we bounced from that 786 Fibonacci. It was also the midline of your descending channel, and we're breaking out of the channel again. We're pushing up. So depending on how we come up into this area, it could be the start. This could have been our entire corrective move, and now we're about to do a 1, 2, 3, 4, 5 to continue pushing higher. So we don't want to set limit short orders here hoping that it gets filled. We want to follow the reaction. We want to see some low time frame bear divs as we're coming up into this golden pocket, and primarily we want to see the liquidity grab, the rejection from the golden pocket, and then starting to lose it. And that would give us that nice scalp short opportunity where I would be shorting this. My first TP would just be taking out the lows. That's already a really nice risk to reward, but then we could look at your trend based Fibonacci extinction targets to get that scalp short. And then once once we start getting down to those targets, we can look at taking that long for continuation to the upside, and also leaving some of this to run. And just focusing on some low time frame scalping for right now, because we are starting to range after a pretty aggressive move over the weekend and the past couple of days. We are starting to range. But welcome in, everybody. Thank you so much for being here. Let's see here. No shorts now, folks. Yeah, I mean, let's see if we get this. What I'm looking for is I'm really primarily looking on the 15-minute time frame and under. So if we do get bear divs between this high here, or even on NAMI, which is quicker, more locally, as we're trending up within this very low time frame channel here, we want to see those bear divs. We want to see money flow topping out here. And if we zoom in onto like the 5-minute chart, you can see that Market Cipher B is starting to see and confirm those 5-minute bear divs. We do have bear divs, multiple drives of bear div confirmed. First of all, the local, and then if we take out that high, we'll have the regional bear divs on NAMI as well. So that's what I would like to see as we're coming up into that area of resistance, that golden pocket. And if we can get that and get the confirmed swing failure pattern, I will look to enter the short position there. And just to take out the lows from earlier today. But I have to say this, guys, let's keep an eye on this. I have the alert set. Let's keep an eye on this because we might be able to get this trade during the stream here. But overall, on the 4-hour time frame, if we zoom out to the 4-hour and to some of the intermediate time frames, first off, like I said earlier, Bitcoin is flipping the anchored VWAP to support. That is your first sign of strength for continuation to the upside. Another thing that we can look at is the money flow is just looking very, very strong on both NAMI and Market Cipher B. We are looking pretty strong here. And this, we might see continuation to break up. And remember, if we hit that 77,338 level, that is going to be our invalidation for the 5-wave impulse down. And I'm talking about from 98K, wave 1, wave 2, wave 3, wave 4. If we come hit this golden pocket pulled from the highs of wave 3 to the lows of wave 3, that is going to invalidate that scenario, and we'll finally be able to throw that out of the window. That is a high time frame scenario we've been following, but we are very close to invalidating that scenario. Doesn't mean we won't see a pullback from this area, though, guys. We can still reject from this area and drop, $3,000, $4,000, $5,000, and that could still give us our short trade, a scalp short at least, that could turn into a day trade or more. But it would at least invalidate that we're going to see a fifth wave impulse pretty aggressively to take out 60K right away. Okay, let's see. Krish Vanya, welcome in. Shorted Bitcoin at 74,470. Okay, yeah, that is above our golden pocket, so that's pretty good. You can see if we do start to break above that golden pocket, I hope you did take some profit once we started to see this overlap here with the bull divs on low time frames. I hope you did start to take some profit on that, but good job. You still might be able to stay in that position. If we reject from here and then get that last push down, that last little leg down, then that's going to be a nice short trade. Joshua, welcome in, man. Let's go. Was hoping to have it live yesterday. Yeah, yesterday was a pretty good day. And you know what? We have had some boring streams. Hopefully today is a little bit nicer of a stream. And we do have FOMC tomorrow. So FOMC tomorrow should be a pretty aggressive day. Certain people are talking about the Fed doing rate hikes. Certain people in the know are talking about the Fed doing rate hikes again. And if the Fed starts hiking rates again, that could be a bearish catalyst for the crypto market, for risk on assets in general. So, guys, Sirac, is NAMI a better version of Market Cipher B? I would say it's a quicker version of Market Cipher B. And by the way, you can see that NAMI looks a little bit different than it has in the past. So NAMI has just implemented their phase 2 update here. And they have smart adaptive time frame now for when you change your time frames. It's going to kind of change those settings automatically for you to give you a clear sign of the prints of the hidden bull divs, the bear divs, the bull divs. And then you also kind of got this thing on the side of your screen over here where you can see the momentum. It shows you like how aggressive the momentum is trending. Your money flow index, it shows you how aggressive your money flow is trending. Your stochastic RSI here, and then your VWAP. So I am just now testing this. This just went live yesterday. So it's going to be interesting to see the new update and how it affects NAMI. I thought NAMI worked really well before, but this is supposed to be a better upgraded version. So let's see how this works over the next couple of months. I'm excited to see the new possibilities it can have for us. Bubba Trading 9, welcome in. Yeah, we just started, so we're just talking about maybe seeing a scalp short from this opportunity right here. And we can pull that volume profile actually of this sideways range as well. We are getting above the value area high. And then even earlier today, just about an hour ago, we flipped the VWAP to support. So when you flip that VWAP to support, you expect the local trend to continue at least to the next local resistance. We're coming up to it right now. I've been strongly considering getting it here soon. Just wondering why use both NAMI. Well, so why, Tony, that's a good question. Why do I use both if NAMI is faster version? Sometimes, well, first of all, Market Cipher B, one thing I will say about Market Cipher B is their money flow is really, really on point, especially higher time frame money flow and the intermediate time frame money flow. It really is a great indicator of kind of what the overall trend in the market is doing, the overall direction, the power of the direction as well. So and then once the bear divs do confer or bull divs do confirm on Market Cipher B, then you're starting to get some pretty strong, because usually if one drive of bull div confirms on Market Cipher B, you can see you kind of have multiple drives confirming on NAMI. And when you see them both together, I've learned to trade. First off, I used Market Cipher B for about 6 years before NAMI was even created, and then once I started using them in combination with each other, I think that using them in combination is better than just using one or the other. So that's why I do stick with both of them. And I'm familiar with Market Cipher B. I've been trading with it for years. So I know what to expect when I see certain things on Market Cipher B. And then I can come down and learn a little bit more about NAMI. I've only been using NAMI for, I think, 9 months now, 6 to 9 months now. But the strategy I've developed with NAMI and Market Cipher B has been a really powerful strategy. And I think you guys know that strategy that I'm talking about. When Market Cipher B has, like, let's just say in this instance, when Market Cipher B has bear divs, and we're making higher highs in the price action, lower highs in the momentum waves, and then the money flow is topping out. And then when you go down to NAMI, and NAMI has those multiple drives of bear div, and you can see maybe some money flow bear div as well. When I see those 4 in combination, that is such a good signal. It plays out at least 80% of the time. I haven't done the hard statistics on it, but it plays out so tremendously. And I'm hoping that NAMI still gives those good money flow bear div signals, because the money flow bearish divergence on NAMI is a really good indicator. You can see here as NAMI was getting that money flow bear div yesterday, 4 drives of money flow bear div. That's kind of when we finally stopped the pump yesterday and started to see a bigger pullback. So that to answer your question, that's why. Yeah, extra confluence. Absolutely. Higher time frame, guys. What I can say on the daily time frame and the weekly time frame. First off, we're at the bottom of a major pitchfork in here, the bearish pitchfork. It was the bottom of the pitchfork, and generally you will see pretty strong bounces from the bottom and tops of pitchforks. Also, it was our previous range point of control on the daily time frame. We pretty much closed that daily candle inside of this previous 2024 range point of control, and we wicked down in that liquidation event directly to hit the value area low. So it was a definite level where we expected at least some sort of high time frame corrective move, right? High time frame corrective move. Now we've been in this 6-7 weeks now, high time frame corrective move. But we had a couple different macro scenarios, right? We had the 5-wave impulse that you see here, wave 1, wave 2, 3, 4, 5, and then the 5th wave, though, you can't end it at 60K because there really was only 3 waves within this, and you need 5 waves within your impulse. So that's why we were looking for a potential correction and then a drop again to finish that extended 5th wave. Now that this range has been, let's see, where's this range? This range has been pretty much 39-40 days, and our original range was 7.5 days. So we are getting up to about 5 times the length of your smaller wave 2 range, and that is getting pretty stretched as far as time goes. It's not a hard invalidation, but it makes the probabilities far less that this is going to be a 5th wave to the downside, that this is a 4th wave correction to finish your 5th and final wave. But that also means that it puts this whole entire impulse to the downside in jeopardy, because if you don't finish a 5th wave in there, now we would have to look at this as probably a larger WXY correction in here. Either way, we are expecting a lower high to come in before seeing that 60K low taken out. But the difference between the 2 scenarios is in this 5th wave to the downside, you would want to reject from pretty much where we're at now, that 75.3 to, you know, that general area, and you'd want to see that aggressive drop come in the next week or so. And in the larger WXY correction, this would be your Y wave, where your Y wave could come all the way up to the golden pocket. And if you pull that golden pocket from the highs at 98K down to your 60K lows, and you turn on that golden pocket, you're looking at that, you know, $83,000 to $85,000 area, which does have some nice confluence with our pitchfork midline. So we're going to keep an eye on that as well. And then that is also where your value area low is of this upper range, this 2025 range that we had in here. Your value area low of that range is going to be pretty much right in that zone as well. So that's a very nice resistance where if we do start to push up into that resistance, could be a nice short to come all the way down to take out 60K. But money flow on the daily time frame looks pretty strong. You can see on Market Cipher B, we're finally bottoming out and starting to get that nice like curve to the upside in here. And on NAMI, it looks very strong, pushing heavily into the green. A lot of momentum right now in the green on that money flow. And then the big thing was on the weekly time frame. On the weekly time frame, we've seen in the past when these big green dots confirm on Market Cipher B, you generally get a few weeks of a move to the upside. So green dot confirms a few months ago, you get 7 weeks or so, 6 or 7 weeks of a push up, and that push up is a pretty aggressive push up. I know on the weekly time frame it doesn't look aggressive, but 20-30% move to the upside. When we saw that the last time was towards the end of the bear market. You can see we got that green dot, and after that green dot we had 1, 2, 3, 4, 5, 6 weeks, pretty much 6 weeks of pushing up with a couple red dojis in there, but it was a pretty aggressive push to the upside. So are we going to see a few weeks of a push to the upside, maybe up to $85,000? That is, and we've never really seen where you have 2 green dots so closely confirmed in here together. So it's going to be interesting to see what happens here on the weekly, but I'm just going off the technicals. Now, I do still think we are going to eventually come take out those 60K lows. It's just, are we going to push up a bit higher than we were expecting first and invalidate that impulse to the downside? Well, we're just going to have to see. And if you guys watched yesterday's video, I talked about how we're not really seeing too much bearish signals on the chart right now, bearish confirmation signals to look for that bigger short. I mean, if we were going to see us reject from this 75K area, we would want to see some at least, midterm time frame bear divs, like 2-hour, 4-hour bear divs on the chart. And we weren't really seeing that. Plus your money flow looked so strong in here that money flow is going to dictate that overall move to the upside, and we want that money flow to be topping out and starting to drain out as we're coming up into the resistance. And it was the exact opposite. As we were coming up into this resistance, money flow was just looking very, very aggressive here. And look at it, still looks pretty aggressive. Money flow looking pretty aggressive as we're coming up. Okay, let me check the chat here. Time Attack, welcome in, my man. Thank you so much for being here, and thank you for modding. Sudeep, happy St. Patrick's Day to you. Much love to you, and thank you for being here, and thank you for modding. Yeah, guys, it is St. Patrick's Day. Happy St. Patrick's Day to everyone. Hope you're wearing some green so you don't get pinched out on the streets out there. Okay. Can you please tell us something about OHLC and equilibrium levels of daily, weekly, monthly? Do you use it? OHLC. I'm not sure I use that. I don't know what that is. OHLC. Maybe that's a what's the word for that? Maybe that's an abbreviation of something, but you'll have to give me more on that, because I do know a lot about different strategies. So equilibrium levels are just the 0.5. So if you're looking at an equilibrium level on the daily time frame, you go to that daily candle and you're looking at so you pull from the high to the low of the daily candle, and it's just your 0.5 Fibonacci. They also have indicators you can use to turn on, like I think there's a really good indicator on here, guys. It's called MTF strategy, MTF, key levels of support and resistance. So if you turn this on, you can get a bunch of different levels on here where it will show you your previous day equilibrium here. Right now we got our daily open, daily previous day lows, and then you can turn on a lot more for it. Weekly highs and lows. I mean, you can pull it manually or you can just use an indicator, but you can see you got all those different levels. Open, high, low. Okay, maybe that's what that means. Previous day open, previous day low, previous day high. That is more of lower time frame trading, like scalp trading and stuff like that. And there's plenty people who use that method. They'll look at the first 15-minute candle and they'll get an idea of what the market's going to do and trade off that pretty much New York session or whatever session they're trading on. But I generally don't use that strategy too much. I'm going to take a trade if it comes up to my level, whether that trade is during New York session hours or during Asia session hours. If I see it coming up to my key zone of resistance and I see my confirmations to enter, I don't care what time of day it is. I don't care, if it's late or early, or if it's not during market hours, like a New York market session. I will look for the short if I see the confirmation to enter. All right, let's keep an eye on this, see what Bitcoin is going to do here. We are starting to see some nice bear divs here. You can see the bear divs forming on the 5-minute time frame as we're grinding up here, and this is what I want to see. Let's actually pull this low time frame channel in here. And if we're going to continue to get this kind of grind up within this channel, this small 5-minute channel, up to that golden pocket, that'd be nice. I would expect a bounce right now. I would expect a bounce from the value area high where we're breaking above it. We're trying to flip it to support. So let's see if we can get that bounce and create one more drive of bear div on the 5-minute up into this golden pocket. And that would be a nice little confirmation to at least attempt it, if and only if we get the SFP. I just shared on my X my trades. Bubba, is your X account just your title here? Bubba Trading 9. My JHK, welcome in, man. The biggest update of NAMI in 2.0 is an update algo for the momentum wave. No change with the money flow from what I understand. Okay, what False Prophet reached out to me and he told me that it is, let me read what he just said so that there's no confusion here. Got a big update coming to NAMI indicator, adding smart time frame adaptation to the display, so no more low time frame chop. Because one of the things on NAMI is when you would be on the 5-minute and you would look at this, you would see so many divs in here that it was hard to read. You really had to kind of zoom in real close on the time frame. So now it's adapting these time frames to give you those more clear bear div signals on the 5-minute. But then if you zoom out to the hourly chart, it is now going to adapt that time frame. So it's going to give you those bear divs that a clear signal of the bear and the bull divs here. So that's pretty cool. Now, if there was some update on the algo on the momentum, that's going to be interesting to see how that changes NAMI, because I thought the momentum was pretty good on NAMI. It was quick is what it was. It confirmed a lot quicker than Market Cipher B. So let's see if it confirms the same in the same speed, because getting those multiple drives of bear div on NAMI and seeing 1 or 2 on Market Cipher B was a really good setup for me. So I hope that that doesn't change too much, because that signal for me really did work. But we'll have to see. You know, this just went live. This just went live yesterday. All right, let's look at, let's go to our 12-minute. If we start to lose this channel, that's not going to be good. And we're once again front running this SFP here. That's not too good. But what I want to see is a bounce around where we're at right now. Let's see if we can bounce around this area. Maybe you could come down to the VWAP again and see another little tap of the VWAP. But we want to maintain this trend overall, this kind of micro time frame trend that we're in, until we at least get up to that golden pocket area, or, you know, the SFP. So if we could do something like this, come up here, SFP, and then start to lose it, I would look for that short upon losing it. Stop would go above the high, and then my TP1 would just be targeting today's low. And that's still a really good risk to reward ratio. Of course, I would leave some open, because what we could then be now looking at is we could be looking at that trend-based Fibonacci extinction from high to low to the lower high. Let's just put it on the golden pocket, and we could be looking at that target between the 1-to-1 and the 1.236, which I really would like that 1.236 there. And you could be looking for the short from here all the way down to here and seeing that bigger 3-wave corrective move, right? Kind of like an hourly 2-hour corrective move after an aggressive pump that we saw over the weekend. And then continuation to the upside. Now, tomorrow is going to be very interesting with FOMC coming out. Tomorrow is going to be quite interesting to see what happens. We did have the bear divs on the 5-minute, guys, so this pullback is a little bit expected to see this pullback here. Let me throw that volume profile on again. We don't want to lose our value area high by too much. I mean, to see a little bit of chop through it is okay, but I don't want to start losing this trend line here. I mean, there's a couple ways you could pull this channel. You could pull it from the low, something like this. And let me get rid of that smaller one for just a second. All right, money flow is starting to try to come up again. Let's see if we can't get this close. I would like to see a 5-minute candle close now above the value area high. Just a little bit of a fake out to come down to the bottom of the channel. Let's see if we can close this 5-minute candle. I know it just opened, but let's see if we can close it above our value area high here. Yeah, let's look at our order flow as well. Okay, order flow. Actually, this move up that we've seen today from the lows earlier, we have a pretty nice move to the upside. So fresh longs are coming in on this move to the upside, which in some ways is good, because if we do SFP here and then start to reject, we could see that aggressive move down, because it would squeeze out all of these long positions that opened in here. Another thing to be looking at, guys, as we were dropping yesterday. So first off, on the pump to the upside, breaking out of the range, you can see here for the most part, it was a pretty healthy push to the upside. We had this nice push up, but especially in after flipping the anchored VWAP, and I covered this in yesterday's video, but after flipping that anchored VWAP into support right in here, you can see that we had, now that it was being flipped to support, a lot of longs coming in, and for the most part those were fresh long positions that were coming in. So we were seeing the bulls kind of take control locally yesterday, and we pushed up to break to new highs inside the range and really start to see an actual kind of breakout of the range. And then more importantly is on the drop that we saw yesterday after the highs yesterday evening, we were dropping on a decrease in open interest. So it wasn't a bunch of fresh new short positions. It wasn't the bears trying to take control again to push the price back down. It was just some late longers that started getting stopped out, and some longs that were starting to take profit here. So that, and then once again, make a low today, and we start seeing long stepping again today. So I would say overall right now, at least locally, the bulls are in control right now, and they're kind of dictating the price. There we go. See, this is exactly what we kind of wanted to see here. Starting to push up, starting to break that 5-minute candle, just a little bit of a fake out underneath that value area high. Let's see if we can't come up to the top of the channel. You can see the top of the channel is going to be around 75,100, right where our golden pocket is. And we want to see a push up pretty aggressively here in the next 10-15 minutes. Get that SFP of earlier today's high, and then start to lose it. And if we start to lose it, I will look for the short here, because we do have some bearish confirmations to at least look for a scalp. Let's go to the 24-minute time frame. Do we see, man, the money flow looks pretty good on the 24, and let's go to the hourly to see how this looks. I mean, it doesn't look bad. Let's just say that. It doesn't look bad. Come on, what's happening here? Okay, let's see. Funding on Bitcoin is also negative for shorts, so I will think we will go up a bit more. We also have a Coinbase premium. Okay, wow, interesting. Yeah, man, let's see if we can go up a little bit more, but I am still going to be looking for scalp shorts from this golden pocket area. Would like a pullback to 70 to 73K area. Yeah, now let's say we do get the short, guys, from this golden pocket at 75 to 75 100-ish. Let's say we do get that short. And actually, you could even come up to the 786 as well. You can see this nice little order block right in here. And let's turn on our 786 as well. Okay, 786 is quite a bit higher. But I do like this order block in here as well. So could you peek your head up a little bit past that golden pocket and kind of fill this order block? Sure. But what on the, if we do get another pullback, you know, you first of all did break some local market structure bearishly by taking out, you know, you could say even this low here or this low here. You broke local market structure bearishly. So now, because we broke bearishly, you could look for a lower high before expecting another lower low. And the most common area to reject on that lower high is in that general area between the 786 and the golden pocket. You'd want to see those low time frame bear divs coming in. And let's see if we can trap some longs up here. If we go to our order flow, let me go back to the 5-minute chart. I want to see some longs coming in right into that golden pocket. I mean, we do have a lot of longs coming in this past few hours here. Pretty aggressive long positions. So it would be nice to get that SFP here, and then we could see a nice squeeze down pretty quickly with the amount of longs that have opened up in this channel. Okay, let's see. It doesn't look like you have an affiliate link for Market Cipher B, right? No, I don't for Market Cipher B. I never even reached out to him to ask him. I know that that's CryptoFace, and maybe I should reach out to him and ask him if that's the case. But I know that yeah, I've just used it. So open high, close lows. Okay, I see. So that's kind of like a candle strategy there. Yeah, orb strategy. Okay, that is what a couple guys in the Casper crew use. I know that they've been pretty successful with that. A new 15-minute starts the dump. Okay, I see. Samuel, welcome in, man. Thank you for being here, and thank you for modding. It's good to see you. Yeah, let's hope we don't get another boring day today. I really hope we can get at least into one scalp today. Can short now? I wouldn't be shorting now. You're not you're so close to taking out this high, and you have a golden pocket just above it. So I would be at least waiting for that resistance to get hit. Also, as far as your money flow looks, like even on the 12-minute, looks like we're trying to roll up a little bit more. I would like to see a bear div on the 12-minute and the 15-minute. That would be the best thing to see as we're coming up to this golden pocket. Doesn't look like we're going to get it, but we already do have the 5-minute bear divs confirmed and the 6-minute bear divs confirmed here. It would be even nicer if we could get one more. Something like that. And then one more of these. But overall, we're holding the value area high. We broke above it just in the past hour or two. Came down, back tested it right now, like 10 minutes ago. Holding it. So let's see if we can't get another little new local high just above that 74,850 high that we made earlier. Michael, good evening, man, from London. Awesome, man. Thank you for tuning in. Sleepy2307, welcome in. Do we have bearish CVD divergences? Okay, let's see here. So for bearish CVD divergences, actually, yes, technically you do. You're very close to invalidating them. But for bearish CVD divergences, you want to be making lower highs on the price action, which, yes, we are. You want to be making higher highs on the CVD, and your open interest is increasing. So we do see some bearish absorption here. Actually, yeah, we do. It's very close to being invalidated right now. And that is a pretty aggressive bearish CVD absorption, though. Interesting. Man, if we're so in order to see that bearish CVD absorption play out, you definitely wouldn't want to take out that high. I mean, that's if that doesn't play out. And by the way, the target for this bearish CVD absorption would be to take out that low, you know, that local low that we saw earlier today. So maybe we are going to roll over. We're so close to SFPing this, and we do know that the swing failure pattern, grabbing that liquidity, stopping out those local players is one of the things the market makers hunt the most, is that liquidity. Remember, the market runs off liquidity first and foremost. Liquidity and volume levels. Let's actually go to our low time frame heat map, and let's look at the last 12 hours. Do we have, yeah, and see, we have that liquidity that's coming up just above us. So right into that $75,000 area. You can see right when we get up to 75,000, it would take that liquidity from that high. So, I mean, it makes sense to me. We have that liquidity resting right into this golden pocket from this high from earlier. Could we come up, grab that liquidity, and then start to see that move down? Now, on the other hand, yes, we are seeing it is a bearish CVD absorption, not even divergences. It's absorption because our open interest is increasing here. And in order to have true absorption, you need new positions to absorb. So we do have those new positions opening up, and primarily those new positions are long positions. So if we do start to lose now our trend line here, then maybe we could look for the short. In that case, you'd probably want to see like a loss of the trend line, maybe a small bounce from golden pocket or even POC. And then if we come back up and back test that, that is when we could look for the short here. Stop would go above that local high, and then we could be targeting those lows. That's still a good short trade right there. So there's no rush to get in because we're so close to the decision here. Unless you want to just short right now, just in case, and put your stop above the golden pocket. You know, you could still do that. That's still, and then you'd be targeting the lows. That's not the best risk to reward ratio, but you could even target that 1-to-1 Fibonacci extinction, or, you know, really that back test of the pitchfork band would be a really good. So it depends on how you play your trading. Just use proper risk management, and you want to make sure that risk to reward ratio is at least above a 2.5-to-1 risk to reward ratio. Okay, now the low time frame NAMI waves are quite similar to market cipher B, 1 second to 15 minute. Interesting. So Machi, I know that you just got the update as well. Have you been studying the difference quite a bit here on the NAMI update? Because for me, I just haven't had, I mean, it's been what, a day at most. So I would like to get a better test of it. Like, I generally like to test things pretty aggressively before I give a definitive answer on what I see. But I'd be interesting to see what you think about it. Why is it bad that the SFP is front run? So when you have liquidity that close and you start to see a drop before, oftentimes you'll get a drop to local support, and then the next time you just bust straight through it. When you front run a liquidity grab, it's less likely to play out the next time. So if we are going to start really dropping here, and then we come up here, it's going to be, sure, it could still play out. It doesn't mean it's not going to play out, but it's less probable. And it means the next time you come up to it, you're going to bust straight through it. The big thing for me is if we start to lose VWAP, guys, I'm going to say, okay, maybe this bearish absorption is playing out. Biggest thing to learn in trading is when you should be entering into a long, short, or to neutral. Yep. I mean, risk to reward ratio, and also your stop loss. Stop loss really is everything. Is it possible we won't visit the 60K lows again? Man, well, it depends on your time frame, right? But there is one possibility, and I've got my alert set here, guys, so don't worry, we'll keep an eye on this. But as far as the larger corrective move from the all-time highs, right? The WXY correction, if this is going to be that WXY correction and the Y is done, you have just that small zigzag for a week in a Y, There is a possibility that the WXY is done and that we're building 1-2s, 1-2s. We're going to explode 3s, 4-5s, 4-5s. You know, maybe grab your 98K liquidity, see a pullback, and then continue. Yes, there is a possibility that it could be done with. And also remember, we're looking at that bigger flat correction from the beginning of 2025. We came down right to our 1-to-1 target. I mean, if you look at that candle body close, and then we even had the back test of that 1-to-1 Fibonacci extinction. So this bigger correction, now we wouldn't be calling it an ABC unless you could still probably count this 1, 2, 3, 4. Just this is a 5. You don't have a clear 5-wave impulse in here, but the larger ABC correction, or you could even say this is a WXY flat correction, a high time frame weekly WXY flat correction. Well, whatever you're looking at it, you did hit that 1-to-1 target. And yes, there is a possibility you could push up straight from here and see impulsive. So what's important on the high time frames is this going to get really impulsive? Because right now there's no way to count this as an impulse yet. You could say 1, 2, 1, 2. Even that has a problem though, because on your first one, there is a way to count this as an impulse. There is a way to count this as a double zigzag and a 2. But this second one and the second 2, on that second one, there is a big problem with that. So let me zoom in on the 4-hour. If we're looking at this as that 1, 2, in this push up, so you have your wave 1 here, wave 2, in this push right here, it is very hard to count this as a 5-wave move, right? Because you have, if this is a wave 1, first of all, your wave 2 retraced to like the 886, which is uncommon, but it's not a hard invalidation. But then what are you going to say? This is your 3, because that's only a zigzag there. You can't call that an impulse. And this is a 4, and this is a 5. You can't, there's no way to really count an impulse in here. So I do have a problem with some people that are saying 1, 2, 1, 2, and now we're going to blast off in a 3 here. This secondary 2 in here, there's no real way to count that as an impulse. If anything, you know, like there's overlap between this high and this low in here. So you can't say, you know, remember at one point we were looking at a potential double 1, 2, 1, 2, 1, 2. We needed a 3, and then we needed some 4, 5s to continue. And that could have been your third wave in a bigger 1, 2, 3, 4, 5 if we would have got that. But we didn't get that. So there's a lot of chop in here and overlap in here, which is not what you want to see in an impulsive move. That overlap between the highs of 1s and the highs of 1s and the lows of 4s, you cannot have that in impulses. That's a hard rule in Elliott waves. So, I mean, it's this range is honestly quite tough to count as far as Elliott waves, to try to find a really bullish count. It is quite tough to find that. So that is one of the reasons why I'm still hesitant to say that we are going to break up to 85K or 80K. This is kind of our zone. Remember, that 0.5 Fibonacci is the level you would expect to reject in a wave 4. And time is, you should take time into strong consideration, but it's not a hard invalidation in Elliott waves. Sometimes you do see that non-symmetry. And if we're looking at that 0.5 Fibonacci, that is where we're coming up to, and we're starting to reject from that 0.5 Fibonacci. So there is still a possibility, even though it looks really ugly. Wave 1, you have your running flat in a wave 2, your big wave 3. Now this has to be classified as impulsive because we had a high amount in increase in volume, and you surpassed the 1.618. You even surpassed the 2.618 Fibonacci extinction. And in a flat correction, you're not going to go that far. So that would be the third wave. And then you could see a 4 and then a 5 to come down to 57K or so, 57, 58K. But you have to start to reject from this general area. At least you cannot hit 77.3. Because if you hit 77.3, that's your golden pocket pulled from the highs of wave 3 to the lows of wave 3. And that's kind of your invalidation, is that golden pocket coming up to 77.3. So we don't have a hard invalidation of the 5-wave count being invalidated yet, but it is starting to get a little bit iffy. And if we were going to reject from here and really see that big push down, you generally want to see mid time frame bear divs. Now, NAMI is giving us those bear divs. You can see here, it is giving us those bear divs on the 4-hour. Money flow is looking still pretty aggressive, and you do not have money flow bear divs. You generally would want to see money flow bear divs too, but Market Cipher B's money flow looks really strong here, and that's a bit concerning to me. Quiles, welcome in, man. Thank you so much for the super chat. And yes, we'll check out U.S. oil, LUS oil. Is that different from U.S. oil? But we'll check that out in just a second here. U.S. oil. We didn't quite make it up to that golden pocket. I'm still looking for a potential three-wave move down on this for a corrective move, and then we might see continuation up, especially if things keep getting bad with what's happening macro politically, geopolitically. So I'm pretty sure you just wanted to look at this, right? Quiles, let me know in the chat here, but I'm pretty sure you're just wanting me to look at that U.S. oil. Yeah, okay. Never mind. You posted right below it. I just need to read one below. PTP. But okay, so on US oil, and guys, I have the alert set for Bitcoin. You know, we didn't quite break market structure bearishly on this, so we do have still pretty aggressive. We had that aggressive parabolic move, and we never really broke market structure bearishly. But this push down was pretty aggressive. And if you zoom in onto the 1 hour here, what I don't like about this, and I was looking at this earlier, first of all, you did bounce from a golden pocket. And that is a good level to look for the bounce, golden pocket. And this does look, I mean, you could say, is this a wave one? And then this would be a real low time frame flat in here for a wave two. This is your wave three. This is your wave four. This is your wave five. So there is a way to count this as an impulse, but you're kind of forcing that. It does look better overall as a three-wave move. And if that's a three-wave move, then you would expect to see a corrective move up to your golden pocket, and then you still could see a Y wave to the downside, some sort of flat in here. That's kind of what I was looking at, is coming up and rejecting and then seeing a move down. But we didn't see that yet. So could we see something like this, where you come up, reject, or because this started out as a three-wave move, now you might see a 1, 2, 3, 4, 5 and continue pushing up here. You did have some pretty bad bear divs here, and this is part of the reason I'm looking for a short on oil, is because the bear divs we were seeing as we were rising within this channel. And remember, this corrective channel structure, the overlap that you start to see in here, that's buying exhaustion starting to occur with very nice bear divs. Money flow topped out and money flow started to get out of here. I mean, that is what you want to see for that kind of pullback to occur. I was waiting to hit the golden pocket though, and we didn't hit the golden pocket. So because of that, this could be now an extended corrective move before then seeing that drop. And then you got that bigger sideways correction in here. One of the things though, I'm just, with oil especially, it is affected a lot by geopolitics. And we know that, you know, the Strait of Hormuz, all the stuff going on with that, this thing could start to pump at any time if there's fears that there's going to be shortages in oil again. And so you just got to be really careful, or, you know, kind of watch the news, because one little thing, a tweet or a piece of news could really cause that fear and cause this to spike up again. Wait, BTC just broke the line. Let's see here. Yeah, I mean, we're just hovering around the VWAP. So you do see small deviations, because it's not, this is a micro trend for the day, right? A super small micro trend. So yes, it is a little bit concerning that we're starting to break this now. what I would want to see, because we now are hitting the VWAP, and remember, we did have that bearish absorption on the charts. So if we're going to come up again in here and reject from that value area high in the back of the trend line, that is when we could look for a short. You know, we could look for a short. You could even put your stop something like short this with your stop above that high right there, and then be targeting taking out the lows. Spot CBD, she goes down. Let's see here. I mean, she was a little bit very locally, but overall, from the low earlier today, your CVD is still rising here. So you still are technically seeing that bearish absorption on the charts. Crypto Shaw 256. It's good to see you, man. I know you've been in Jason's community for a while too. I do use the Bybit CVD. I tested. So when I first had Coinalyze here years ago, I tested this aggregated open interest and the aggregated CVD. But Bybit, you know, there's a lot of big whales, the Bybit bros, we call them, you know, the big Bybit bros that trade on Bybit. It is one of the biggest futures exchanges, right? Futures derivative exchanges. So Bybit CBD, for some reason, just gives you really, really good signals. I also used to use the Coinbase chart on this, but with the Coinbase chart and the Coinbase CVD, you were getting more fake outs of that CVD. And as far as like absorption, generally you're looking for absorption on like lower time frames, right? The 15-minute under local absorption, local bearish absorption. And for some reason, the Bybit CVD just works really, really well for that. But it works better when you use the aggregated open interest, when you're looking at what pretty much the whole market's doing as far as opening or closing positions. So I know it's a weird combination that I use aggregated open interest, but not aggregated CVD. But I have tested it. And if we look at, let's see here, let's go to BTC USD. If we go to the Coinbase chart, oh, of course it did that to me. All right, give me a second, guys. I gotta get in on this here. Okay, and let's go back to BTC USD, Coinbase. So you can see here the Coinbase CVD. I mean, yes, overall it is still going up, similar to Bybit's, but Bybit's is smoother and it does give you, but your open interest, and let me just put on an open interest chart. Open interest. Oh, I guess it's not. Well, I'm not sure why the open interest is not working there, but I just the Bybit chart, I've tested it and I do like the Bybit chart as far as CVD goes better. Okay, WXY 126 to 60K, A equal done. A is done. I think that's what you mean. Then 60K to 100K in an ABC for a B. Oh, you're looking at a real high time frame. Okay, I see what you're saying here. On the very high time frames, you're looking at, so you're looking almost at like let's zoom out to the 2-day chart here, and you're looking at all of this as an A, B, C in a W, right? Wait, okay. Then 60K to 100K in a B, so an A, B, C up to 100K, and then you're looking at another move in a WXY. So this would be WXY down here. I mean, that's, yeah, that would take months more to play out, but there is a problem with that. If you're looking at this as a 3-wave move down in a W, this here, yeah, I guess you could, you know, these look like 3-wave moves overall, right? It's hard to count impulses. So if you're looking for this ABC as a W, this doesn't look impulsive finished. And this right now, we can't say it's a finished impulse either. And if it's an ABC, you need a 5-wave impulse in here and a 5-wave impulse in here, right? And it's hard to count a 5-wave impulse in here. And it's also hard to count a 5-wave impulse in here because all you have, once again, is that zigzag here and it stops. You didn't get another retracement and another low. But I see what you're saying. W, X, Y. You're looking for a much longer move to finish. And you're looking for it to pull back to 30 to 40K. I mean, if we are going to get that high time frame corrective move, yeah, you could see, you know, that would be in our zone around 40, you know, to 32K. All right, what is going on here? Oh man, maybe this bearish absorption is going to play out. What I would like to see now is if we can bounce here, come back up and back test the value area high, we could look for that short because we are seeing bearish absorption. And here's the thing, guys. If you get stopped out on this one and we do end up SFPing, then you could just re-enter here. You lost 1% on this trade, but maybe you're going to make 5% on the SFP trade. So that's something I'm going to watch for. Let's see if we get this to play out during the stream right now. Yeah, aggregated CVD is higher than yesterday. Yes, so that's bearish absorption, right? When you're seeing lower highs in the price action and higher highs in the CVD, that's bearish CVD divergence. Market Monkey terminal tools are now free since a couple days. Footprint bar stats, heat maps, CVD. Awesome, man. Thank you, Crypto Shah, for letting me know that. I'm gonna check that out as soon as the stream's done with. Thank you for that. Yeah, a slow until Asia open. We could see something like that. I know that this is kind of like power hour that's going on right now, but it's lately, man, it sucks. Yes, I've been hopping. Awesome, Crypto Shah. Well, it's good to see you in here, man. Crypto Wander 1, welcome in. Super late today. It's all right, man. Thank you for being here. Yeah, guys, please hit the like button. While we're waiting, real quick, I want to take a second to shout out the partners of the channel. I know this gets annoying for some of you guys that are here every single day. Trust me, it gets annoying to say it as well. But let me just take a second to shout out the partners. So the main partner is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40%. You do have to deposit some pretty large amounts into the exchange to get up to 40%. But they are offering even 20% discounts is a lot higher than most exchanges do. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. And since we're already trading those futures markets anyways, it's a way to earn extra, you know, Bitcoin or USDT. And then they're offering some of the best initial deposit bonuses in the entire industry, better than any exchange I've seen. So for instance, on a $100 deposit, you can get a 50% deposit bonus. Most exchanges do a 20% deposit bonus. They're offering 20% deposit bonuses up to $1,000 and 10% deposit bonuses up to $20,000. That is huge because even Blowfin is offering a 10% deposit bonus on the $10,000, but they don't let you do a 10% deposit bonus on 20,000. So that's double what Blowfin is doing there. Now, I have partnered with BYDFI to create that Telegram community where I really do try to keep you guys updated on what I'm thinking on Bitcoin throughout the day, or if I do decide to take a trade on Bitcoin or the altcoins, I'll let you guys know the trade that I'm taking. It is a private community, but it's free to get into. So all you have to do is sign up with BYDFI using my affiliate link and then to make the minimum deposit of $100 or more. And that money is your money. You're not paying me that money. You're just depositing it on the exchange in hopes that you'll try it out and like it and use it as your primary exchange. You'll get to see how good the order books are filled. You'll get to see the nice UI there and just the low fees and everything and the extra bonuses you can earn. But once you've signed up and deposited the minimum deposit of $100 or more, you can click the Telegram link in the description of this video. And once you're in that Telegram verify channel, just type in /verify in your BYDFI user ID, which will be right up next to your little character here. And that'll get you into the Telegram. And once you're in, guys. The second partner of the channel is Blowfin. That's my second non-KYC exchange that I partnered with. So Blowfin, they're doing VIP 1 for 30 days. You get if you deposit just $5, you can get a $10 voucher. That's for the first 300 users only. And then there's those 20% deposit bonuses and a 10% deposit bonus on $10,000. You'll get $1,000 of a deposit bonus. So if you're interested, Blowfin's another great, really great non-KYC exchange that I've partnered with. I did 2 non-KYC and 2 KYC because I know some people like the non-KYC, some people like the KYC. So the KYC exchanges are MEXC and Bybit. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC is offering that 10% initial deposit bonus up to $1,000. And then lastly, I forgot, we do have NAMI here. NAMI is another partner of the channel. So NAMI is this momentum and money flow indicator. They just updated to a version 2.0 today where they have this adaptive time frame with the momentum and the money flow and showing you those bull and bear divs. And NAMI's been a really great tool. So guys, a lot of you know how I trade. I mark out, I have a rule, price action first, indicator second. So what that means for me is I'm marking out, I'm using technical analysis, whether that's order blocks, Fibonacci's, pitchforks, channels, naked daily points of controls, value area high, value area low. I'm marking out the levels of confluence where I see a lot of support, like multiple levels together, right? And so maybe I'll put a box there and then I say, okay, that's the zone I'm interested in taking a long or a short from, in this case, a long. And if we're coming down there and we're seeing some bull divs as we're coming down there, so I'm not just going to long this randomly just because it's a level of confluence. I'm going to come into my indicators, and if I see these nice bull divs forming as we're coming down into there, that gives me my confirmation to look for the long, right? I'm not just going to randomly set a limit order here and hope it plays out. I want to get into the more probable trades that are going to play out. So that is where I use both Market Cipher B and NAMI for, is their confirmations to enter and exit trades once we get to the level. And so for me, since I've been using NAMI and Market Cipher B for those confirmations, it does help you, it helps me personally at least stay out of the trades that are less probable to play out and get into the trades that have a higher probability to play out. And also it can help you get out of it. Say you do come down here, you bounce, and you're starting to move up real slow here. You're starting to see a lot of that selling overlap here, and you're starting to get some bear divs into a local resistance. Okay, hey, maybe I'm seeing those bear divs. I'm going to take a partial here and move my stop loss, and then it does something like that. So it has drastically increased the amount of profit I take from trades, and also the losses. It keeps me out of the bad trades. And for me, it's a proper tool to use in the market. So if you're interested, NAMI, I have partnered with them. They are giving 50% off. So if you use my affiliate link in the description, and then in the promotion box or the discount code box, type in Divine50 and you can get 50% off on NAMI. I don't think The creator, False Prophet, has talked about doing right now with the launch of 2.0, there is no price increase yet, but there might be a price increase in the future, guys. So if you do use that 50% off discount code and you get the lifetime subscription to NAMI, you could lock in before he does increase prices. And I don't want to give you guys FOMO. I don't know if he is going to increase prices with you guys. Also, I do know that sometimes, like on Black Friday last year, he gave a 60% off discount code, but 50% off is generally the highest he gives unless it's a super special occasion. So if you guys are interested, honestly, for me, it's paid for itself more than enough. You know, with it helping me gain the most out of the trades that I do get into, and to stay out of the bad trades where I could lose money. For me, it's just been a really great tool. So something to think about there. If you guys want to purchase NAMI, it's in there. Yeah, guys, we are starting to dump. Maybe this CVD absorption is going to start to play out here. Man, we do have a lot of longs that were coming in. Let me get back to on Bybit. Looks like, let's see, we are kind of double bottoming here on this little pivot. Let's see how this 5-minute candle closes, if we're going to close above that VWAP or not. But we could start to look for a short here, guys. If I'm hesitant to take the short, even though we are seeing legit bearish absorption here. We are seeing lower highs here in the price action. We are definitely seeing higher highs in the CVD. And your open interest is definitely increasing here. So that is textbook bearish absorption on the charts. But, I mean, we just got so close to taking out that high. And also knowing that that golden pocket was front run earlier today, I'm hesitant because I think that, first of all, it would be probably a safer trade and a better trade if we can kind of get up there, take out that high into the golden pocket, and then drop, because we do have that liquidity resting right above us. For me, that would be a better trade, but we might not get it. And like I said, if we do continue to drop to this POC and bounce from this POC, I'll be looking at a lower high rejection around the value area high. And what we can do is we can pull that golden pocket. It's going to be right at that value area high. And that is where I would short. So if that's the case, we want to see this kind of grind down for a little bit more. And then when we come up here, that is when you could enter short here. Stop would go above your local high, and then we would be targeting coming to take out that low there. And that's still a good scalp. Look at that's a 5.5 risk to reward ratio there for a scalp. And because we're seeing bearish absorption, we know that it's unlikely that we take out that high. If that happens first. Now, if we start to move, if we really haven't quite lost the VWAP quite yet, we're just chopping around it. If we start to close a few 5-minute candles underneath, and that's when we could look for that trade. But for now, I'm just going to be patient here and wait to see what we get. Yeah, we can check on ETH. Shiny, we can check on ETH for sure. Check the WTE ratio. You'll find your smoking gun. So, Sleepy, a short squeeze is when you're squeezing shorts out of the market. So say you had a lot of shorts that were shorting up in here. And what a short squeeze is, and when you start to squeeze them out of the market, you're actually pumping. With the amount of longs that we're seeing here, you're seeing a bunch of longs open up in here. If you start to drop, you could actually see what's called a long squeeze, where you stop out all those long positions and you get that long squeeze to the downside, and it's a squeeze, essentially a squeeze. It's just you're squeezing the longs instead of squeezing the shorts. But yeah, we could see that long squeeze. Absolutely. We could see a long squeeze with the amount of longs that have opened up in here. You would want to come in onto your order flow, and you would want to see this starting to drop, because when you're squeezing, you're stopping out or liquidating positions. So you're going to see your open interest starting to drop here. Our Pink, welcome in, my man. Thank you so much for posting all those links in the chat for me. Appreciate you as always. One of the best mods there is. It's really awesome. Thank you for always doing that, our Pink. Up, down, or sideways? Well, it seems like Crypto Wanderer, when we start streaming, it just goes sideways, right? Like, it's crazy. Can't even get into a freaking scalp trade. Earlier today, Jason was streaming, and we got this, and we got this, and then I start, and it's this. Yeah, that WXY on high time frames. Well, let me and trust me, I'm paying attention to this, guys, but let me go onto the index chart. We're gonna go to our weekly time frame, and we're gonna look at this move up that we saw in the bull market, right? So if we're looking from the 15K lows up to our original highs at 109K, we're gonna take our trend base fib time. Where are we at? Right here. And we're gonna go from the lows of the impulse to the highs of the impulse. And in a corrective move, the minimum amount of time you want it to take is the 382. But if you have an impulse that lasts about 2 years, 3 years, your corrective move is at least going to be like, look at once we cross the 0.5 Fibonacci, about half the time that it took for the impulse, we start to get a move up here. A very common one is the 618. So if we can push up here, maybe push down here and take out that low as we're crossing the 618, that could mean this entire corrective move is over with. We're coming right into that golden pocket as far as time zone goes, that golden pocket 618 key psychological level. But your corrective move, if we're looking at, like, there's a couple ways, first off, I think that this is a 1, 2, 3, 4, 5. I think the impulse was done there because we got our weekly break in market structure. You broke market structure bearishly on the weekly time frame. And we're looking at this as a flat, right? Because you did come right up to your flat target between the 1.382 and the 1.236. And I've shown that to you guys many, many times on this channel. See how we came right up to that 1.236 flat target, 1.382. And then now we need that push down. And the push down, the objective of this push down was to take out your A wave lows at 74. And I remember when we were all the way up here, a lot of people were saying, no way we're going to take out, no way, even in this range, no way we're taking out 74K. There's no way we're going to take out 74K. I said, just pay attention because this really does look like a flat here. And it does look like we are at least going to take out 74K. But remember, I was thinking we were going to stop at 70 to 68K where that golden pocket was. But we didn't. We kept busting through. But if this is a flat in here, you want this corrective move to last at least past the 382 Fibonacci. We've done that. We just passed the 0.5 Fibonacci. So we're now, actually it was on the, since that, that was 3 weeks ago. And since then we've had 3 green candles, right? As soon as we pass that 0.5 Fibonacci. It would be nicer to take out the low one more time into that 618 Fibonacci. And actually, do I still have that on the chart? That is going to be around the end of May. The end of May, beginning of June. Let's see here. Yeah, last week of May, Sunday, May 24th. So maybe Monday, May 25th and stuff. And it's generally not exactly right on the day. You can see on that last range, as soon as we cross the 382, a couple days after crossing that 382 is when we got a corrective move. Here, it's been, a week or so, and then now we're starting to get that move up. Yeah, this is what I was worried about, guys. Okay, let's see if we have money flow. Looks pretty good on the 5-minute here. Let's go on to our 1-minute time frame. No bear divs here on the 1 minute. Now, here's the thing. If you guys want to attempt this, I'm not a financial advisor. I don't give financial advice. And if you guys do decide to take a trade, it's on your own volition, of course. If you start to reject here on this 1 minute candle, then you could open the short, stop going above that local high we just created earlier about an hour ago, and you could target down towards those lows that we made earlier today. If we start to push up and close this candle above the value area high, just be careful because you are pretty much bouncing from that VWAP in here. And remember, when you, in an intraday trend, when you flip VWAP to support, it's generally, if it holds, you continue the trend up. You continue to make higher highs. I like the trade better, not this short trade right now. I like the short trade better of SFPing into the golden pocket. And then as soon as you lose it, looking for that trade, right? It just makes a little bit more sense to me as far as liquidity. Cut the long. Are you from here? Are you talking about that long? You did see some 1 minute bull divs coming into that, but if you were going to take a long right there, a scalp, as soon as you started to reclaim the VWAP, you could have long that, and then you could be looking. But it's dangerous to take a long when you're seeing bearish absorption on the charts. And you are seeing bearish absorption. So see, guys, now we're starting to break up pretty aggressively above that value area high. Let's pull a golden pocket real quick on the 1 minute. Okay, this is where you would want to pretty much reject. Maybe wick a little bit higher. I'm not really seeing it. Money flow looks pretty good here. You don't have any bear divs. Let's look on our order flow. Yeah, new long position stepping in, pushing this up. Actually, you did get some short positions that are now likely to get squeezed out if we continue a little bit higher. What would be super nice is to see a short squeeze to take out this high. Like if this last little bit, you see your open interest drop a little bit here to squeeze out the shorters that just entered. And then you get that short position play out. So you pretty much can use 4x your whole account, and if you get stopped out, you're only going to lose 1%. That's a rough estimation, right? If this was 0.25, you could use 4x your whole account, and if you get stopped out, you're only going to lose 1%. If you're putting your stop above these local highs. Now, you could also look at even putting it above the golden pocket. That still does give you a 3-to-1 risk to reward ratio. Could cover you in both ways because we're seeing the absorption. You might reject here. For me, I would take it as 2 trades. I would take the loss here, and I would try to re-enter if we came up. Give me a second, guys. I'm just going to do this calculation real quick and possibly enter this. Caesar, welcome in, man. I was expecting, appreciate you, man. You can't control the markets when you're streaming. Yeah, for sure, man. Right. Yes, and the thing is, like, it is harder for sure to scalp while you're streaming because you're having to calculate certain things, or you're watching the charts and trying to read the chat at the same time. But you know, a lot of you do have more time than you think to get into moves. Like, we've been sitting here for 2 or 3 minutes, and you know, if you wanted to enter here, you had enough time to get in if you wanted to. Yeah, but it is bearishly backtesting golden pocket in the bottom of the channel. It doesn't look like it wants to reject. Random question. Have you ever borrowed against your BTC Ether Soul? No, I've never done that. I've never borrowed against my crypto personally. Maybe I have once. I don't know. It's been a while. I know that you can. I think I borrowed against my Solana once. On like the Soul, it was Soul Liquidity or something like that. I can't even remember. It was a while back. Now remember, if you guys are getting into this short, just make sure you're using proper risk management here. I did I did attempt this, guys. I did Chris Stevania. I just, because I'm fine getting stopped out and trying again up here. And the only reason I entered is because we are seeing the bear divs. So let's see if we do end up taking it out. You know, we're right around the value area high. What I am worried about is this exact thing continuing up here. And if I get stopped out, I get stopped out. And then you just look for the next one. Not every trade's going to be a winner, guys. And that's another thing. You're basing it off probabilities, especially if you're scalping. You're probably going to get, say you do 5 or 6 scalps in a day. You could even lose 3 and win 3. But as long as you're using proper risk management, once again, guys, you could lose 50% of your trades. And if you're at a 1 to 3 risk to ratio, you're still profitable. So, you know, you could lose, I mean, just, you could lose 70% of your trades and win 30% and still be profitable as long as it's a 1 to 3 risk to reward ratio or more. So if I get stopped out here, I lose 1%. Okay, fine. Then we come up to SFP this high and I enter after that. And we do get that to play out, you know. It's an 8 to 1 risk to reward ratio. So I lost 1% here, but I could be making 8% on the next one. You know, you're still up overall. And the only reason I entered here is because we are seeing some bearish absorption on the charts. I do have to say, I don't like how this CVD is dropping so much here. We are seeing those shorts come in. I guess I'm one of them, so. Dread Mining, welcome in, my man. Isn't it much more likely to take out the wick? Yeah, I think so. Dread Mining, I do think it's, I do. The only reason I entered this is because the bearish absorption that we're seeing from that New York high wick, right? Lower highs in price action, your CVD is making higher highs, and your open interest is increasing. So we are seeing bearish CVD absorption. And bearish CVD absorption is a really nice indicator. Are we going to just see the drop? Everyone's expecting the SFP. We're going to see the drop. I don't know. Honestly, I would rather take out that high in SFP into the golden pocket. It would be a better setup for me. But because we are seeing this bearish absorption, I'm giving it an attempt. And maybe we do reject, or maybe we do just even, you know, kind of see something like this and then come back up and get it. If we start to bounce from the point of control, I might pull out like 20% and then move my stop to break even. You know, that's still close to a 3 to 1 risk to reward ratio there. You could even say coming down to value area low and taking out the channel lows. Because remember, all of this was fresh longs coming in. So we have a lot of stops that are resting below these pivots. If you start to squeeze down, you could squeeze down to take out this low, but not take out this low. My default stop loss is too tight. I used one for another chart, stopped out quick. Well, there is an indicator on TradingView called the ATR indicator, average true range. And when you're using that, it'll give you the, like right now, I think it's like $38, it's $38, $40. So that's in the dollar price of this thing. So if we're at roughly, you know, what is that? 74,680. You can put your stop $40 above, at least $40, because the average candle right now is about $40 here. So your stop loss you could put above that. Now, that seems a little tight though. I don't know why. Maybe does this change based off? Yeah, okay. So it does change based off your time frame. So $250. Like if you're scalping on the 15-minute, $270. So that's your average candle price. The size and price is like around $270. So you can put your stop, you know, above $270, and that way you won't get stopped out. For me, I actually look at the pivots. I don't use the average true range very much. I generally base it off the pivots of market structure. All right, guys, we do want to make another, like, we technically did break 5-minute market structure bearishly by taking out this pivot. That was a bearish break in market structure. And then you came up to your golden pocket for a lower high. So we do want to break down. If we break now this low, it'll confirm 5-minute bearish market structure shift, right? And then we could see that drop. And let's actually pull our golden pocket from the lows to our highs. And we'd have to pull to this high. I don't really like where that golden pocket's coming in at. It's in the middle of this channel. So maybe our 786 would be a good spot to see. Yeah, it would pretty much be the SFP of this low. And I think I'm going to get rid of this channel now. It's kind of breaking. Look at where the whales are layering their BTC spot limit orders. Yes, that is something, a good strategy to look at. Just the only thing is you got to be careful with that, because a lot of the whales have learned to set those limit orders so they show up on heat maps, and then they'll take them off as you're coming up to that level. So there is a game whales play with that. So I would just caution a little bit against that, or just use caution when using that, not against it. That wick was also daily open. What's the chance of 9 green daily candles? Yeah, nine is quite a lot, actually. I know that this week, guys, on the weekly candles, we had 6 red weeks in a row, or was it 5 red weeks in a row, which is very uncommon for Bitcoin. 1, 2, 3, 4, 5, 6. Yeah, we did have 6. And there's only been one other time in Bitcoin history where you had 6 weekly red candles in a row. So that was kind of a sign that, okay, maybe we could see a bit of a bounce, or at least a couple green weekly candles. But yeah, on the daily time frame, wow, 1, 2. Your momentum is starting to get a bit toppy here as well, but the money flow just looks so good so far. $75,000-ish. Well, 75,000 is right where that golden pocket was, the SFP of the New York highs into that golden pocket. So that makes sense that there would be a big wall there as well. Come on, Bitcoin, are you just going to fart around in here? Crazy. Yeah, it's toppy and bullish. Well, it depends on what time frame you're looking at. On the intermediate time frames, I still do think Bitcoin looks kind of bullish. Like, honestly, there's no real bear divs up here, and we are not really losing as far as higher time frame market structure goes. We're not really losing it. And remember, market structure is one of the best things to look at. So like on the hourly chart, you can see here, you're still making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Here was a flat. You did make a higher high, a higher low, a higher high. You're still making a higher low here on today's low. So is it, you know, as far as 1 hour goes, you haven't even broke market structure bearishly on the 1 hour. So on the higher time frames, you still have to remain with a somewhat bullish bias because of that. But on the lower time frames, sure, now you've broken some low time frame market structure. So do you get that corrective move maybe to just come down and take out these two pivots from yesterday in here? Okay, yeah, ghost orders and spoofing, exactly. I was going to look at ETH real quick. Let me check out ETH. We'll keep an eye on Bitcoin. Don't worry, guys. ETH. So one of the things that I was looking at on Ethereum is we did reject from the golden pocket earlier today. So let me get rid of this for a second. And let me get rid of this for a second. ETH is breaking out of its range pretty aggressively, and it's breaking the pitchfork band. And if let's start at the intermediate time frame. So we were looking at the ranges that often form in and around these pitchfork bands, and we are breaking this range pretty aggressively to the upside. Nice big impulse to the upside. I am looking at, we did have some, let's see, where was our resistance at? We had some resistance. Yeah, at the daily, we were rejecting that daily, and it's also a daily order block from this consolidation in here. So we could see a little bit of a pullback. I don't know if we're going to pull back enough to back test the pitchfork band, but we have to watch now for this pitchfork band to be flipped into support around 2140. And continuation to the upside. We don't really have a whole lot above us, guys. Like, yeah, so this was our zone, our naked daily point of control in our daily. And I think I talked about this zone on Monday because ETH has something, or excuse me, Solana has something very similar with a naked daily and a daily in there. But this is our zone of resistance, kind of this area. We're not really rejecting from it yet. You can see even today we came down and we bounced from what used to be a naked daily point of control. As soon as you break it up, it's not naked anymore. But no bear divs on the chart. Money flow looks really strong. No bear divs on the chart. Money flow is starting to come down, but not aggressively yet. I honestly think that ETH could continue here. And what I'm looking at now is this first move down looked corrective, right? Push up or push down, push up. That looks like a three-wave corrective move. So because of that, could you see this continue now? Because that was a little bit of a corrective move. The other possibility I was looking at is a larger corrective move where you have your three-wave move down, your move up to the golden pocket in a corrective move, and this does look kind of grindy and corrective, and then one more push down, and overall you're still holding market structure bullishly, and then you see continuation. And that would give you that channel. Like when you see a rejection from a lower high golden pocket, you can go from the high to that lower high golden pocket and bring it down to that initial low. And that kind of creates that bull flag, right? You got your pull. And then if you see that move down here, that is when you can see something like that. But it's been very choppy and we're not really rejecting. I have to say, we're not really rejecting here. On the lower time frames earlier today, I was looking at Ethereum and I just didn't see, even though we rejected that lower high golden pocket, I didn't really see any nice moves. I was looking at this channel here, and you can see we had our initial three-wave move down, and we've been just grinding in this channel. Let me turn off our levels for a second. We're not really losing the channel, but you did reject on that New York high earlier today, the golden pocket right there, rejected the golden pocket. And then you did break very local market structure bearishly by taking out this low. So there is a possibility that this is going to be another move down, because this started as a three-wave move. We kind of need that overall double zigzag three-wave move in here, and then you'd get another three-wave move. And that's why you saw when I first had the chart on, I had pulled a golden pocket from your last kind of pivot low on the 15-minute to that pivot high. And I was looking at coming down to this golden pocket at 22.92, because it would sweep all of this trail of liquidity, take out this low into a golden pocket, and then you might see that little continuation up. So I didn't take the short on Ethereum, even though we were rejecting from here. I didn't take the short. If you did take that, you could still stay in that. And I would at least consider taking some profit on this SFP into the golden pocket. If you get this SFP into the golden pocket, because remember, bullish market structure still. So we're expecting higher highs and higher lows. If you get this overall crappy move down like this, and you actually SFP this into this golden pocket and you start to get back above, take profit on the short, you might even be able to enter it along here. And this is a scalp long just to take out the highs. That's still a 5.5 to 1 risk to reward ratio there. And then this thing could keep rolling up pretty aggressively. Ethereum, and there is a pitchfork. Let me go on to my second Ethereum chart. There is a pitchfork where we're at, but look at, we're flipping that pitchfork into support. We broke out of the pitchfork, and you can see we bounced from the lower band, chopped around the midline for a bit, but then we we rejected the upper band, fell to the midline, bounced from the midline, and then busted through that upper band. And now we busted up through, and we're holding this pitchfork as support now. So a bullish breakout of this pitchfork. I mean, to me, it's likely Ethereum does continue. Now, you had some bear divs, just a small amount of bear divs here. So could you see a three-wave pullback for those 1 hour bear divs to play out before continuing? Yes, you could. And there's two pitchforks I'm looking at on Ethereum. Let me zoom out to the 4 hour. So this is a pitchfork just based off our local bullish structure, pulled from the low to your first major high, range high, down to that higher low within the range. This is your kind of trend you were chopping in, this real crappy chop we saw for the past 3-4 weeks. But if we start to break out of this, I'm expecting to come up at least, 2,700 to 2,500 is where I would expect to come up to the higher time frame pitchfork. So let me hide this one. I would be expecting to come up at least to hit this general area. And if we look at some of the levels, this is the Bybit chart. So let me, man, even that naked weekly at 27.35, and you do see wicks past this sometimes. So are we going to see something like this where we kind of grind up, before seeing the big pullback? Are we going to grind all the way up to $2,700? There was also let me go on to my Coinbase chart because I have those marked out. Couple naked dailies in there as well. That same area. Around 2,700. And then if we look at so that we're at that daily level here in that daily order block. But this in here, there's not a whole lot keeping us, right? Because we could shoot all the way up here to fill this fair value gap, this daily fair value gap. Actually, let me turn it on. You can see this daily fair value gap right here. If we start to enter it, you could reject from the bottom at first, which is going to be the bottom of the pitchfork band. But if you start to enter it, you're likely to fill it in full and then maybe come up to the top, that $2,700 area. And Ethereum looks pretty strong on, look at this daily money flow on NAMI here. Very aggressively strong, just starting to round out the past week or so, week or 2 weeks on Market Cipher B. And once again, there is kind of a problem here. Wave 1, wave 2. If this is all your wave 3 that's going to come in here, then you would have a 1, 2, 1, 2, 3, and then you would expect some 4, 5s, 4, 5s. That would just be your larger third wave, right? So this would be your 1. This would be your 2. All of this would be a 3, and your 3 is a double 1, 2, because you start out with this overlap. So a double 1, 2, you'd get a pullback in a 4, and then you would get a 5. You might be coming all the way up to backtest this range in here. Maybe not the value area high of the range at 34, but you could backtest these lows in here. And like this little bit of, you could pull kind of this guy here and be looking at backtesting, you know, $2,900 to $3,000. And if this is going to be impulsive, that plays out over the next couple of weeks on Ethereum. But if this is on Ethereum on the higher time frames, if this is a wave 3 to the upside, you got to be careful shorting it. It might not even, you might not even get a scalp short till 25 or 27. Right? And let's pull our trend-based Fibonacci extinctions real quick here. Let me just get rid of this scribble. So if we're looking at our wave 3, you're looking to come up to 2,500-ish, right? If this is a 1, 2, your third wave generally comes up to that area or higher. It doesn't have to stop there. It can come up a little bit higher. Then you get a pullback in your wave 4 between the 382 and the 0.5. And then you get your wave 5. So we'd be looking at this a few more days and maybe another week of upside on Ethereum. And because Ethereum started the third wave, this is the third wave, right? Because it started the third wave with these 1, 2s in here, double 1, 2. So let me zoom in onto the 4 hour. I'll try not to confuse you guys here. But on the 4 hour, this is the start of your third wave, right? So you'd have to look at this. Wave 1, 2, 1, 2, and then you're in your third wave. You could get some 4, 5s, 4, 5s to end your third wave around that 1.618, or it could end at 27. You know, I'm thinking that it might do something like 1, 2, 1, 2, 3, 4, 5, 4, 5. Something like that, where you reject the first time, you get above it, you flip it to support, then there you get up there for the end of your third wave, you see that pullback in a 4, and then you finally get that 5. That's your bullish scenario. Now you would need Bitcoin to continue breaking up pretty aggressively too, because if Bitcoin does roll over here, then Ethereum's going to roll over as well. All right, our short is still intact here. Okay, let me read the chat for a bit. Yeah, we'll get into some of the altcoins. So we had to look at ETH, and then there was another one. What was it? ADA, I think it was. Interesting, the ADA is coming up to our midline. We're starting to find some resistance at the midline, and look at the last time we did as well. This midline, but what I see here right now is a triangle. Looks like continuation. I haven't checked ADA in quite a while. The big thing with ADA is we are consolidating around your larger value area low. You can see that's of our whole kind of sideways range that we've been in for about 4 years now. This bottom accumulation, like this was clearly a range in here. We broke out of the range and then we formed a higher range. Wait, that was your smaller range. And then we formed a higher range in here. But once you start to fall back inside of this range, you can combine the two. So that's what I did, right? You had your lower range, your upper range. Since we started to fall back inside, now you can combine the two. And that's where this larger range right here is coming from. And we were bouncing from the value area low of the range. You can see very nicely bouncing from the value area low of the range. Now, as far as this channel goes, I'm going to delete this now. We got a really nice long from that, by the way. From the bottom of the channel all the way to the top of the channel. And we got a really nice short from this purple box up here, too. I'm going to delete that. But you were starting to see that chop, right? So just like if we're looking at a larger corrective move, ABC, your C wave needs to be an impulse, right? So you start it with a couple 1-2s. 1, 2, 1, 2. Here's your big 3. Here's a 4, 5, 4, 5. And you got that aggressive 5 to end it. So this impulse could be done with. And now because you have your 2 1-2s, you have your big third wave, and then you have your 2 4 5s. That's why I created this channel, because we started to see that grindiness. Just like up here, we had a channel with some grindiness. You had your aggressive move down, and then you started grinding in another channel here, right? Now, at the end of that, we got a bit aggressive by leaving outside the channel, but it was a deviation of that channel. Now we're getting back inside of it, and we're starting to form a bottom. And remember, this bottom is being formed at a macro volume support level, the value area low. And by the way, a few months ago, someone asked me, I said, I would even start dollar cost averaging in here. You're at the value area low. You're near your freaking bear market lows here. Like dollar cost averaging on ADA is not a bad idea. We also had, what was it on the daily time frame? Not the hourly, the daily time frame. We had some bear divs that were, or bull divs that were forming. At least on NAMI we did as we were coming down in this last drop, and you can see rejected. By the way, we're looking for that short too. Rejected here, dropped. And now what I would be focusing on ADA is this lower range. So let me hide this channel for a second. I would be focusing on this structure, because there is a real possibility this could break up. So first, let's pull our volume profile for that structure, and I'm going to look at both ranges, this one, and then we can even combine to add this little guy here. Yeah, you're at your value area high pretty much. Be careful. And then also it's going to be your golden pocket 786. Golden pocket value area high. So this is definitely a resistance that we're at. You could see a pullback from here. Now, we're not really seeing that pullback yet, and it honestly looks like bullish consolidation. Once again, in here, actually, this looks like a bit of a very flat channel that we're seeing. So you're seeing consolidation at your golden pocket and value area high. To me, it doesn't look very bearish yet. And even if we're looking from this low, you have your 1, 2, 1, 2. You're in your third wave. Inside your third wave, 1, 2, 3. All of this could be a 4, and then you could get one more high and a 5 just to finish this third wave. And then you would expect 2 more bigger 4 5s just based off of that. I mean, it looks pretty good. Money flow looks pretty good. You're not really developing any bear divs here. You did. I'm not sure why that's shown. That's a lower high here. But to me, it looks pretty good. You're at resistance though. So you're playing with fire if you're trying to long this right now, because you're at a high time frame range value area high, and you're at your golden pocket pulled from that last big daily high to the lows. Right? So you got to be careful trying to long right now, because you're at the golden pocket pulled from this high to this low. You're at your golden pocket, you're at your value area high. And you're also at the channel midline of your bigger channel. Right? And last time we came up there, we did reject from that. Now, in a traditional accumulation, let's say that we were going to see that traditional accumulation that you see in bear markets, right? So you have your big initial low, you range for a bit, you could even come up and take out the range highs, and then you drop and you take out, your tap 2 is always lower than your tap 1. And then you could continue, you get your tap 2, you see another push up back into the range, you kind of chop around within the range a bit, and then you get your tap 3 in a model 2. So that's that inverse head and shoulders, right? Left shoulder, head, right shoulder. You have it last a few months so the whales can accumulate down here in the bear market, and then eventually this thing breaks to the upside in expansion. So is that something we're going to see where we have a few months of an accumulation range start down at this value area low, this macro value area low of a 4-year long range? It's possible. It does look pretty good right now, guys. Even though we're at resistance, we're not seeing bear divs on the chart. You are seeing the momentum top out a bit on the 8 hours. So could we get a pullback? Sure. What I would do is look at your smaller range, and you're actually holding the value area high. You see we're breaking above. We're rejecting the value area high. If we add this little bit of chunk of consolidation, you're squeezing between these two value area highs and your midline. And it's just, I have to say, money flow looks pretty bullish still. It does look like we're going to break out. One of the things I would be watching for is the trap, right? Everyone thinks this is a bull flag that's about to play out. Swing up here, grab the liquidity from Monday, and then fall down. So I would watch for that. But ADA looks pretty good. It looks pretty good to me. Yeah, I mean, you're not seeing bear divs. You have not made a higher high in here. That's that descending channel that I just showed you guys. Let me throw that on the chart, right? If we go now to like the 30-minute time frame, you can see that is a small, perfect descending channel. Tap, 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 tap. Midline's being respected pretty nicely. I mean, to me, let's hide the bigger channel again. This does look like bullish consolidation to me. But we have to be aware of just the fake out, and then we see the real dump come in. So you could set an alert at this high. And if we get that, not that, yes. Okay, crossing horizontal ray. And so we'll just create that. And if we do get that SFP, you could look for the short. Okay, let me catch up in the chat, guys. I'm sorry about this. All right, let's go through some more alts here. Yeah, I just did ADA. We'll look at Aster in a second, but let me see. I think Time Attack just posted something here. River. Let me look at River real quick for Time Attack. Okay, let's look at Bybit. Time Attack, is this the right one here? And we'll check out XRP as well. Okay, it looks like this is a pretty new coin. We're coming up to that monthly right now, or this week. That's a monthly that we're starting to find some resistance at. Yeah, we just hit it yesterday. So we're hitting yesterday's high was hitting into that monthly level of resistance. That is also probably going to be your golden pocket, but make sure this is based off log scale. Okay, it's going to be your 0.5 fib, right around there. Yeah. So we are at a resistance of your 0.5 fib and the monthly level. I think is this the proper one? Time attack. Let me know. I do see, at least on NAMI, higher highs here, lower highs. You are confirming bear divs on the daily time frame on NAMI. Now, Market Cipher B is not confirming them, but your momentum wave is topping out, and your money flow has kind of been starting to drain out here a little bit. So you could see a pullback from this area. What I would be looking at is this upper range, and I know it's kind of crappy, but like this upper range in here, and that's a deviation of the range, right? So you could pull your volume profile. Actually, yeah, your value area high is here as well. So you're definitely at a resistance. You had liquidity up here. You had 0.5. You had your monthly. You had your value area high. After tapping the monthly, you did break market structure bearishly by taking out this low. So that's a bearish break in market structure, right? So now are we going to come up and make a lower high before making another lower low? So what we can look at now is pulling that fib. Okay, you're rejecting pretty much your 786 Fibonacci. Yep, a perfect rejection earlier today of the 786 Fibonacci. Not perfect, but pretty damn close. And so, and then you're falling back inside your volume profile, back testing it. Yeah, this is a bit, I mean, look at the bear divs that you were seeing here. 1, 2, 3, 4. 1, 2, 3. Well, okay. This was bear divs, and then you had a new high here, but that's still bear divs between these two highs. Money flow draining out pretty aggressively, crossing into the red. So I would say it is due for a little bit of a pullback here on this. Let's see here. Let's go to the 4-hour time frame. Yeah, you do have some bear divs here. So you're at resistance, higher highs here, lower highs here, lower highs here. Money flow starting to drain out. Money flow topping out on NAMI. You're at the value area high. You grab the liquidity of the range highs. Actually, both of them, because they were semi-equal, right? This guy was higher than this guy. So you grabbed liquidity of both of those semi-equal highs. You have daily bear divs on NAMI. You broke market structure bearishly locally. You're back inside your range. So we could even look at just falling back, and we can look at two things here. This is your bigger range, but you can also look at just this lower price action, this sideways range. So if you fall back down to backtest this value area high, that would be at 16 point, let's say 16.8. I mean, I would be looking for a long off of that, right? You're at resistance. You're expecting a pullback, but because you're breaking out of this lower range, this is now your local support, where if you do bounce here, you can at least look for a double top of some sort. So yeah, 16.797, or pretty much 16.8. And then you can also pull a fib here. Yeah, golden pockets there as well. So that is your local support there. If you do come down to this area, I would at least be looking for a scalp long from this area. But you are at resistance with some pretty high time frame, pretty intermediate time frame bear divs. And look at this on the 4 hour, between this high and this high, you have aggressive bear divs. But even within this curl that you're starting to see here, you have local bear divs, and not so much money flow bear divs on this thing. But yeah, I mean, it's due for a pullback just based off what we're seeing. I would really be looking for this low down here. Let's see if we have any naked dailies in there. No naked dailies, but there might be a naked weekly in there. Okay, it's a bit lower. I don't know if I'd want to come down that low. Samuel, thank you so much for the super chat, man. Wow, much love to you, and I really appreciate that, man. Awesome, awesome, awesome. Thank you so much, Samuel. All right. So that is that one, River. But yeah, I'm trying to get through these as fast as I can, guys. I just want to do somewhat proper TA on this, you know? Like, it's hard to spend just 1 or 2 minutes on a coin that you've never looked at and give proper advice. Or it's not advice. It's not financial advice anyways. It's trading, technical analysis advice. My view on technical analysis. Because we're not looking at necessarily taking any trades here. I would even, if you're looking on low time frames, you kind of have this sideways range you could even analyze. Bitcoin, man, Bitcoin is being annoying as crap. And I was concerned about this short, guys. We're about break even on my short right now that we just took. It doesn't look like it's going to play out. We did have the bearish CVD, but I'm not liking this drop that we're seeing here. So from this high right here, so we are still making higher highs. Higher highs, lower highs. But remember at the beginning of the stream, I did say it would be nicer to get the SFP into the golden pocket, taking out this high into the golden pocket. It's starting to look like we might get that. And like I said, I'm comfortable getting stopped out on this. I mean, like, it was an attempt that I took because of the bearish CVD absorption we were seeing. But other than that, I really think this is a better short here. Yeah. About to get stopped out. Man, this is pushing up pretty aggressive. Is this a squeeze? This is a squeeze. The shorts that came in right in here, including myself, shorts that came in right in here are now starting to get squeezed out. This is a short squeeze to the upside here, squeezing out those those shorters that shorted this. And they were probably shorting because of the bearish CVD absorption like myself, but it looks like it's not going to play out, guys. Okay, we'll look at silver real quick. Silver. So on silver, we're in this range that we've been in for a few weeks now. The one thing with silver is, okay, higher time frame on silver. I'm still looking for a pullback that could last quite some time, right? Because from this low down here all the way in March of 2020, we're in an impulse. Wave 1, wave 2. This is clearly a wave 3 that came right up to our 2-to-1 Fibonacci extinction. By the way, Jason Casper was live right as we were hitting this, and I was telling everyone I'm looking for the shorts right here at 117 to 120, because It's our pitchfork band of a very aggressive original pitchfork, and it was our 2-to-1 Fibonacci extinction. So we come up there, we reject from our pitchfork band and our Fibonacci extinction, and then we get a big flush down. And in that big flush down, you did break market structure. You broke market structure. If we go on to the daily time frame, you can see that we broke market structure. Yes, it was only a wick, but on the lower time frames, you had a 4-hour break. You had a break in market structure. Now, the one thing with this push down that we saw, let me get rid of that now, and let me hide this range for a second. The one thing that we saw with this push down is it looks like a 3-wave move, right? Move down, move up, move down. So because this started with a 3-wave move, I was looking for a 3-wave move up to the golden pocket, which, by the way, I did short this. And now we're looking for another 3-wave move down, and to come down to 58. Guys, 58 is so much support, it's crazy. If we get to 58, I will be longing the crap out of this thing. But if this is going to be a WXY correction coming down to that $58 mark, we're looking for this to be a 3-wave move here. And this third wave is probably going to get a C-wave impulse getting pretty aggressive here. So we did reject that lower high golden pocket. If I pull on that, put on that golden pocket for you guys real quick, you can see, first of all, it was our 1-to-1 trend-based Fibonacci extinction. But if I pull a golden pocket from the highs to the lows, and you want to make sure that's on log scale, you did reject that golden pocket perfectly. You see that? You rejected the golden pocket perfectly. That was this golden pocket between 95 and 97. Also, if you look at taking your trend-based Fibonacci extinction of a 3-wave move from from low to high to higher low, your 1-to-1 Fibonacci extinction was right up here as well. We front ran it just barely, but it's because we hit the 618. So now we got our move down, our lower high into our golden pocket, and now I'm looking for that potential move down. So now let's take a trend-based Fibonacci extinction from the highs to the lows to the lower high. Let's put on our 1-to-1 targets. You could even see a move down to 50 to 43 bucks, but there is so much support at this $58 mark here. First off, in the bigger impulse to the upside, on the 3-day time frame, we clearly finished a wave 3 right here. So now you can pull your Fibonacci from the lows of wave 3 to the highs of wave 3, and your wave 4 correction should be a zigzag correction, and your targets are between the 0.382 and the 0.5. Well, what's at the 382? $58 is your 382. Now, in a super strong trend, the 382 acts as really strong support, or in a super strong downtrend, the 382 acts as strong resistance, right? That 382, there's a reason why when I do this and I come here, I nicknamed it strong trend, because you often bounce from the 382 or reject from the 382 in a super strong trend. Okay, so our 382 is at $58. We also have a naked monthly point of control, a naked weekly point of control at $58. We have a daily level at $58. We have that daily order block at $58. This little bitty order block in here at $58. So $58, even if we bounce here and fail, I'm expecting a nice long from this area at $58. Now, here's the thing. Your wave 2 corrective move took quite some time to play out. Like, I think it was close to 2 years. Yeah, 750 days, right? 2 years to play out or so, you know. So your wave 4 corrective move is often similar or longer in time than this. But there is a rule in Elliott waves called the rule of alternation, where if your wave 2 is really long and drawn out, sometimes your wave 4 is quicker. And so if we do see a quick move down, and this should still take months to play out, right, guys? Should still take months to play out. But if we are seeing a move down to $58, where we can expect a bounce from 58 in a wave 4 to take out your highs at the very least in a wave 5, we would be expecting that to take quite some time. Now, so far, it's been playing out pretty damn quick, right? And it did, because you got so parabolic here that you see these liquidation flushes. But if we're going to see this, you could even see something like that move down, you're going to get a flat in here in a B wave, and then you get your C wave down here. That would give it more time. So if you're short from the golden pocket, I would look at this as at least a TP if you take out that low. And then if you get that SFP, then you could look at coming up to take out this high. Now you have your flat in here for a B or an X wave, right? Your W, your X, and then you get your Y. So what is important right now is to just analyze this range. This is the range that we need to pay attention to. So you saw that when I first pulled up my chart, I had my volume profile pulled for that range. So what we're looking at now, if we're zoomed in on the 2-hour chart, we're pulling that volume profile and we're looking at this sideways range. Okay. We fell back inside the volume profile, moved to the value area low, rejected POC, moved to value area low again, came up to value area high. Yes, you did front run it just barely. Probably not at the time. Yeah, it does look like you did at the time. But we're at the value area low of the range. So now that is always, and there was a naked weekly point of control there. And obviously that's not naked anymore. You did take out the local lows just last week. When was that? Monday, March 16th. So yesterday, you took out those lows and you're seeing a bit of a bounce here. Man, it's tough because you're chopping right around the value area low. This would have been at least a good scalp trade to take, right? But now if we close today's daily candle back underneath the value area low, I would expect continuation at least to take out this low. But really, we're looking at coming down to take out your range lows, right? Because you could be seeing that 1, 2, 3, 4, 5, take out your range lows. Actually, you would want to see a 3-wave move there. So you'd want it to be, and this is actually tough too because this is a 3-wave move here. Then you would look for a 3-wave move to take out those lows and then one more to take out the highs, and that would be your flat correction in here, right? Your flat correction. And then you would expect to come down to 58 maybe in the next few months. But what I'm trying to say is this is going to take time. I knew we were going to range here for a bit, and this is still a small range compared to what we could expect, maybe up to a couple years. The world is pretty volatile right now, and there's a lot of people flocking to precious metals. So we'll see if it does. I mean, I hope we get down to 58 because I'm going to long the crap out of that. You can see I have my alert set. If we don't and we continue to rise, you know, your minimum target generally is the 236. Now, the 382 to the 0.5 is your common targets. And at that 0.5, we also have really good support as well, right? At your 0.5 Fibonacci, it's at $46. You have that daily level. You have a naked weekly point of control down there. You have some liquidity down into this area. But for now, I would say that it's likely you are seeing an SFP from that low just yesterday, but it's not really giving you the reaction you want. I would say you are, and look at your money flow here. You know, you did have some bear divs. Let's see. I thought you had bear divs coming up into that golden pocket. Yeah, you did. So you can see as we were coming up into that golden pocket, you had the bear divs on the chart. Money flow bear divs on the chart. So I would expect this to come down a little bit lower, but I would be careful because you could get a small bounce from the SFP. For me, I would be looking at, and then you can also pull your Fibonacci from the lows of the range to the highs of the range. Okay, that golden pocket there, let's make sure, golden pocket, yeah. I would be looking at the 786, honestly, because you have that liquidity into that 786, right? You have a liquidity grab into a 786, so that could be a little support level where you do see some sort of small bounce from at least a day trade long position, something like that. And then you could look at your naked weekly and naked daily points of controls. You do have a fresh naked weekly. Make sure I get that right on there. And then let's look at our naked dailies. Wow. Okay, so yesterday's low was also a naked naked weekly point of control. It just changed, but you saw that. So it's no surprise we got a bounce from grabbing this liquidity into a naked weekly point of control. Yesterday to Monday, you know, whatever that was there. But look at, we have a naked daily point of control still below us. I'm surprised we don't have one down in this general area, but we don't. Let's look at our trend-based Fibonacci extinction. If we're looking at this as a three-wave move, corrective move down. Yeah, coming into that 1-to-1 to that 1.236. That's your zone, and that's where your support box is. So, you know, if we are going to drop right now, you could see that drop continue into this general area. And then maybe a small move up before continuing down here. But I mean, 58's where I would want to go, guys. Ultimately, 58. Not financial advice, but I know I will be attempting along, especially if we're getting bull divs coming down into that thing. Okay, BTC's pumping. Yes. Shoot. I got stopped out, didn't I? Let's see. Yep, stopped out. No, sorry, no, I haven't yet. I have not got stopped out yet. But it looks like I'm going to. We'll see. I mean, we'll see, guys. This even right here could be a 5-minute, like, little bull flag playing out here. Push up, flag out a little bit. Push up. Let's see if we get that. I just don't like how, look at, actually, that's very nice trend line. So I pulled that channel from this high to this high, but look at it also aligns with this high from earlier today. And we want to maybe pull it to this. And even if you pull it to that original low right here from earlier, you see the lows are being respected as well. Rejection, support, support. So it looks like we're trading in this little trend here. Micro trend for the day. I would like to see a fake out, right? If you're going to break this up just to grab liquidity into golden pocket. Did we see 1-minute bear divs on this? What's going on here? Yeah, you did have 1-minute bear divs between these highs that we were live during the stream on them. 1-minute bear divs here. Money flow is pretty aggressively leaving on the 1 minute. Was that a fake out? Luckily, we didn't get stopped out. Maybe the market makers are watching. I don't know. Hope not. But that was a short squeeze, right? So you see, these were shorts that were coming in, and they were fresh shorts for the most part. So when you start to squeeze up, you're going to see your open interest drop because they're squeezing out those short positions. And what is a forced close of a short? It's a market long. That's why your CVD was increasing here. So this was just a short squeeze. Now, what happens with short squeezes, guys? If a short squeeze ends and you don't see new money coming in to support the position, it can fall right back down. So you want to see new money stepping in, and you want to see them be longs if you want to continue pushing up here. You do not want this to start dropping and losing again, that VWAP especially, or that higher low, because that means the short squeeze could be done and you could drop right back down. Okay, let me see here. There was another one that I was going to look at. We got River. Pepe. Let's see. Pepe. We'll check these. I'm gonna try to be quicker with these guys so I can get through a few more. Oh gosh, I gotta leave very soon here. All right, I'm just gonna go briefly through these. Very briefly through these. Let me just go. Dang. You know what I would say with Pepe is you are, just like Say, starting to see that kind of exhaustion, right? Towards the end, you're starting to see this exhaustion coming on the daily time frame. But that doesn't mean you can't continue it for a while on the daily time frame. Let's get rid of this upper range. Let's get rid of this channel now. Yeah, you're bouncing from your value area low. You're coming up to your POC. You're rejecting from your POC on the daily time frame. This daily's obviously not fresh anymore. You did front run your golden pocket. You do. Oh man, it would have been so much nicer to take out this low. You have a double bottom there. That is not really nice to see. You see how this is a double bottom in here? Say took out that low. But if you would have taken out that low, you would have had some bull divs on the chart. Now, you can see NAMI here did give you some bull divs on this low, these lows, which gave you this push up that lasted the last 8 or 9 days. On the 2-hour time frame, I would be following. Let me get rid of this for a second. I would be following this range. Shoot, you could even include that little bit there. So I don't like that though, because it is technically part of this impulse down. So if you start it when the impulse down finishes, you're rejecting value area high. It's also the point of control of your larger range. Now you were able to get back in the value area low, flip it to support, flip it to support, flip it to support, come up to value area high. So now you need to watch this POC. This POC could give you a bounce now. And if we're looking at pulling a fib, first off, you could go from the low to the high. Yeah, that is going to be where your golden pocket is. So if this at 0.00347, whatever that, however many zeros, 347, 344, that is going to be a nice little support level in there at that golden pocket, where you could see now a bounce. And actually this looks like somewhat of an impulse. Wave 1, wave 2. You're probably going to get a wave 3. I would like it to continue a little bit more, 4 and then a 5 in here. This could be 1, 2, 3, 4, 5. You could get a low, then you could get a pull up in a 3-wave move, and then another 1, 2, 3, 4, 5, showing your bigger A, B, C correction down here. But this is the area I'd be watching. This golden pocket, point of control. And then if you bounce that there, you expect at least to come up to this golden pocket. You're probably going to have a naked weekly there as well. At this, it's actually a little bit lower. Okay. But yeah, it is starting to look a little bit bullish, and you did break market structure bullishly, right? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, but you made a higher low. Oh, higher high. You broke market structure right here. So now you're starting to see, and then a higher low, and then now a higher high. So now could you see a higher low before starting to flip this bearish market structure now into some bullish market structure? So I would be looking at that golden pocket POC here for a potential long. You might come a little bit lower because your naked weekly was going to be around that 0.786. And your value area low is there. If we turn that naked weekly back on, it is in that zone. So that is the next, man, I actually don't, the naked weekly is a little bit higher than I would like it to be because this consolidation, this little liquidity trail, it would be nice to take that out into the value area low in the 786. So really I would be looking for this more than the naked weekly. But what you might see is if you do come down there aggressively, 1, 2, 3, 4, 5, 3-wave move up, and then a 1, 2, 3, 4, and then your 5th wave, but you just wick past the naked weekly into this box of support, but you close like an hourly or 4-hourly candle at the naked weekly, and then you could see that. That's another scenario. Okay. Let's see here. What was the other one? Solana. Solana, just like I was showing you guys on Ethereum, that bullish local pitchfork, right? And let me make sure. Why is that? That bullish local pitchfork you rejected yesterday right at $98, right? 97.5 to $98, right where that upper pitchfork band is. And look at upper pitchfork band rejection, upper pitchfork band rejection, upper pitchfork band rejection. But you are flipping your midline to support. So in the case with Solana, if we are going to continue here, which it is likely because look at your money flow, you don't really have that many bear divs. You do have very local bear divs, 2-hour between these two highs in here, which could give you a bit of a pullback. But on Solana, I mean, I would be expecting, let's go to the 1-hour time frame. I mean, you're in this little range here, right? And this is like your little 15-minute range. This is pretty much all the price action above that break of the midline. And yeah, you're coming up to your value area high right now. Let's see where our golden pocket is. Actually, it's this one. Golden pocket is just a bit higher. Let me make sure that's not on log scale. Okay, golden pocket's just a little bit higher. You could include this little bit. Doesn't really change anything. On the 15-minute, if you do come up to this golden pocket, you will see some 15-minute bear divs. Higher highs, lower highs, lower highs. You are forming those 2-hour bear divs. And if we go to the 4-hour, that's the 6-hour. 4-hour money flow looks strong. So I wouldn't, you might see a bit of a pullback in here. 1, 2, 3, just to grab these local lows, range lows. I wouldn't be expecting too much more than that before continuation to the upside. And the next big level, like I said in the video yesterday, 102 to 104, top of your pitchfork, and it's also a naked daily and a daily level. You don't really have anything else until you get up there. So yeah, just be careful because we are, especially within this little consolidation now, we're starting to see that slow, grindy price action, right? You're starting to see this starting to slow down a bit with potential bear divs on the 2-hour and under. You're still maintaining bullish market structure, higher low, higher high. You know, it's a flat in here. This was a little flat that we saw yesterday. Higher high, higher low. Could you come up? And we did actually, I think you could come up to the top of the pitchfork band, 99.3-ish or something. Let's just say 99.25, whatever, to be safe. Before you see a pullback. So this might continue, and then you might get a pullback before coming up but it looks pretty bullish overall. Daily time frame. Very strong money flow, just starting to curve up here. Your momentum waves are getting toppy, so and you are at a pitchfork resistance. So just be aware of that. I mean, this rejection here yesterday, I had a TP at 98. That was front run, at least on the exchange I was trading it on. I was so annoyed. But Solana looks pretty good. I think you are going to continue up a little bit just based off what we're seeing overall. But you're starting to range. So I wouldn't be longing necessarily just because you're starting to see those bear divs and you're starting to range. If you do get a pullback, like I said, if you get a pullback with like right now, if you reject from the golden pocket, look to take out that low. So you see something like this, zigzag correction to take out that low, and then you SFP that. That could be a long to take out the high. I would just be playing this little range. Overall, it looks like it's going to continue up. And remember, the next big confluence is 102 to 104. Actually, it's 103 to 104. It's 102.93. All right, Bitcoin, guys, I really do got to get going here in just a second. Bitcoin is looking like, you know, we have this little thing. We were seeing the bearish CVD absorption, but like I said, it's highly unlikely. New York opened this morning that high. We front ran our golden pocket. So I think that we are probably going to get stopped out on this short that we took earlier in the stream. Bearish absorption that we were seeing. Lower highs here. Higher highs here. Open interest increasing. But it just, we got so close to this liquidity, and knowing that we have that liquidity just above us at $75,000, and that's also where our golden pocket is at $75,000, and to see an SFP of New York highs, and then if you start to close below, that's what I would like to see. Could we reject and still chop in this channel for a bit? Yeah. Before maybe seeing something like that. I mean, but you have a range on the 12-minute chart. Everything above that anchored VWAP. Yesterday, we flipped the anchored VWAP to support. So let me just... Guys, I will be live again Thursday and Friday. So if I didn't get to the coins you wanted me to get to today, please come back and we'll look at those on Thursday or Friday. I'll post a video tomorrow. And if you're in the Telegram, remember, join the Telegram. And I try to keep you guys updated on what I'm thinking in the Telegram. All you have to do is sign up with BYDFI using my affiliate link and deposit a minimum deposit of $100 or more. But anchored VWAP, resistance, resistance. Yesterday, we flipped it to support on the low time frames. And right when we flipped it to support, we started to kind of range. So now let's go with the 30-minute. You can see broke above it, flip to support, new highs. Now we are starting to range between the 75.3K high that we were looking at and that anchored VWAP. That's your range. Analyze that range. We are at the value area high. Let's see if we get that rejection from our golden pocket. SFP into golden pocket. If we do, that's a short. If not, you just wait. You know, 786 is also kind of intriguing because on very low time frames, there was some liquidity up there. And look at, there's that 30-minute order block. I believe it was a 1-hour order block as well. No, it was a 15-minute order block. Yeah, that 15-minute order block right there. Nice little 15-minute order block into that 786. We still haven't got stopped out. Man, maybe I should de-risk a little bit here. Remember, we got in right here at that lower high golden pocket. Not we, I got in there. And remember, we were looking for bear divs. So on the 5-minute, we had bear divs as we were coming up here. But I said it would be nicer if we came up here with 15 and 12-minute bear divs. So now that we've consolidated for a little bit, 12-minute chart could give us, if we come up there, could give us some very nice bear divs into an SFP golden pocket trade. That's the next thing I'm looking for if I get stopped out. Okay, guys. Hey, Mark, welcome in, man. Much love to you, dude. Thank you so much for being here. Mark is great. Let's see. No funny comment, Mark? What did you do with the real Mark? What did you do with the real Mark? Shoot, I did say I would do XRP. Okay, I got to cover this very quickly here. XRP was breaking out pretty aggressively yesterday. We have broken out, and go watch yesterday's video. I have it timestamped, so you can go right to XRP in yesterday's video. But XRP is seeing a nice little breakout here of the volume profile. And honestly, like, I think we rejected that 786. Yeah, it was pretty much a rejection of the 786. But honestly, I don't see too much on XRP from keeping us to take out this high here. And if we take out that high around your channel midline, we held that bottom of the midline and of the bottom of the channel. And remember, that channel on the daily time frame is a channel pulled from the all-time high to your lower high to your bear market low, or to your, excuse me, October 10th crash lows. So holding the bottom of this channel, now we're starting to move up. That midline's looking pretty nice. Let me turn off the dailies. I mean, we don't really have too much that could keep us from coming up there. Money flow looks pretty strong. If you get a pullback, watch that back test of the value area high, right? 147-ish. Because if we do start to pull back, that is now going to be a support level. And look at, if you get that 3-wave pullback, 147.5-ish. If you do get a 3-wave pullback into that right there, that could be your long to take up to grab liquidity. There's probably a naked daily point of control from yesterday. No naked dailies. Below us, though, yeah, from yesterday, below us, a naked daily point of control at that value area high. So that is going to be your local support level. If you come down to around 147 to 147.5 to 148, I mean, that's your local support where you kind of want to hold that and look for a bounce. So watch for a 3-wave move down there. And if you're seeing some bull dip between this low and this low, 15-minute and under, long opportunity to at least take out your high. I'm actually going to set an alert on that naked daily. Trigger once. Yeah, we'll say, let's just say long. Now, very locally, you could continue up to hit the golden pocket because it doesn't look like you've hit it yet. So you might continue pushing up in the next couple of hours to actually hit that before seeing that move down. But okay, guys, I do got to get going. Love you all so much. Mark Dutch, thank you so much for joining in at the ending. I'm sorry it's the ending. Normal Suite, it looks like you just came in too. And Jesus Safe 77. Love you guys all so much. Thank you for being here. Hope to see you on the next stream.